Good evening and welcome back to the Australian Stock Market Show. I'm going to start tonight's show with a quote from Stephen Covey, or do you say Covey? 7 Habits of a Highly Effective People Who once said, "I am not a product of my circumstances, I'm a product of my decisions." Tonight, Dale and I, in our upfront no BS approach to all things stock market, will share with you lots of valuable content as we aim to increase your knowledge so to help you make better decisions. For our main topic tonight, we're going to take a look at whether now, given the current uncertainty, is the time right to buy gold stocks or gold ETFs. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you going?
I'm super fantastic.
I hear you've been playing with sticks and balls lately.
I have been playing with sticks and balls.
And you even admit it.
I do. I do. And I had new balls too.
Oh, really?
Yeah. I had 4 bright green ones.
Did you lose any balls?
I lost 2.
Really?
Absolutely.
What happened?
Well, look, when it gets a bit rough, you can't find it, can you?
The going gets tough.
The going gets tough, yeah. So, no, but I played golf last Friday for the first time in a long time.
Excellent.
Yeah, I gave myself a Christmas present. Actually, I gave myself a couple of Christmas presents, but one of them was a new set of golf clubs.
Okay.
Because I hadn't had golf clubs in a long time, so I enjoyed playing my first round of golf.
Look, and what happened when you went to buy your golf clubs?
I just walked into the shop and said, I haven't played golf in like 20-something years. I want to get back here. Do I need golf clubs? And he goes, do you want a beginner set or do you want something more expensive? I said, I don't care, just a set that gets me going again, but I don't want a real beginner set. So he just said, and I said, I'm left-handed, which made it more difficult. He goes, we've got them. I said, go, I'll buy them. That was about it. They were Australian made. All I said is they Australian made.
That is good shopping, isn't it?
Oh yeah, I was in about.
That's how you do it.
I'd make decisions. Like, I didn't really care. I didn't want to spend, $5,000 on a set of...
$5,000? Really?
Some of those sets are like, the tilt titeless ones and the tailor-made ones, and you're paying a lot of money for woods and stuff like that. I just wanted to get back into it, so I just bought some Brosnan ones, which are an Australian company. Right. They're probably made in China, but they're an Australian company. But I enjoyed it very much.
Excellent.
Running around, we went and played it.
I'm glad you got some exercise.
We played at Waverley Private near you.
Oh, so, fantastic.
Yes, one of the members took me around, so that was good fun. So I'm into playing golf again anyway.
Wonderful.
But let's get on with the show anyway. Now, before we get into our first segment for tonight, again, we'll take some live calls on the show. Now, if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. The number you need to call is 0392909988. That is 03 for Melbourne 92909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, I definitely know Janine and I are keen to chat to you, so pick up your phone right now and get dialing.
While we wait for you to call, it is the first Tuesday in the month, and this means we have a look at the Australian market. So let's get into the charts.
All right, on the screen you've got a All Ordinaries Index. Is that monthly or weekly? I can't see from here.
It's monthly.
It's monthly.
Would you like me to get a magnifying glass for you?
No, I've got my glasses.
Okay.
I'm not that old. Jeez. Don't be rude.
So look, on the screen there, now we've talked before about how the market really is not much further advanced than where we were back here in 2007, which is amazing. So you would think that we've got a lot of catching up to do in terms of getting ahead. We know that before the COVID crisis that the market got through that high. But then we're more or less back where we started before COVID even happened. So the overall market hasn't really advanced on since then at all. What do you think? I mean, you've been talking about the fact that you think this could be the low. Should I agree with you, first of all?
You never agree with me, but there's always there's always two sides, isn't there?
There is.
And that's what we try and work with people and saying, you have to have a strategy for if it goes up from here, but you also have to have a strategy for if it goes down.
Yep.
And all too often people only have one side of the coin there or one strategy. And even then, it's not even a great strategy. And people say to me, Dale, just tell me which way it's going. Well, the answer is I don't control the market, and neither do you. So how do we control which way the market's going? We don't.
Right.
All we can do is say we think probability suggests X, Y, and Z. That's what's likely to happen, but if it doesn't do that, it might do this.
Yep, exactly.
So that's the strategy. So right now our market's fallen, I think, 11.26% down into low in January. It's now moved up a little bit the last few days. And I said at the start of this fall, before the fall started, I said I expected 8 to 12% fall. So even before we had those falls about 2 months ago, I was saying 8 to 12%. So we're in the ballpark there.
I mean, this time could sort of blow probability out of the water in terms of what we expect, as COVID did.
Yep.
I have never seen the market unfold exactly like that.
Neither have I, but you want to show them?
But it doesn't.
Yeah.
Oh, yeah, we should actually show them.
You can show them on a chart. It's okay. We're allowed to bring them up.
Yeah, you know how I like going to the charts. So let's go to the charts. You can see here that the market pretty much made a high and then looked like it was going to continue to rise and then reversed itself, which, you know, it hasn't happened exactly like that in history. But when the market has actually gone to a high and fallen away, we generally don't see that just happen over 1 month.
Correct.
Not a fall that degree anyway. Usually that happens over a couple of months, maybe 2 or 3. So right now, probability is still tipping for the downside, but it's holding on.
Well, it is. I mean, in my report, or in my more recent reports, what I've said to them, you know, in terms of where I think it's going to go, even though February was an up month because it closed higher than it opened. So February did that, which in theory is bullish, but it's not super bullish given that the open and close are right at the bottom of the bar. So that
it looks weak.
It looks really, really weak. So I've said to everybody all the way through this, expect that it might go through that 7,000 odd point mark down to around about 6,800. That's where I think is the downside risk at the moment. Now, I could be wrong. I mean, I'm not always right. I'm right a lot of the time, but not all the time. So at this point in time, this could just be the calm before the storm, before it has a you know, multiple weeks down, 2, 3, 4 weeks down, or it could be we're starting to move up again.
So this is a challenging time from a trading point of view because if the market falls away, you get flushed out of your positions.
Correct.
Only for the market to potentially turn and go back up.
Yep.
But then it could keep falling.
It could keep falling.
You know, what do you do?
Well, that's the question a lot of traders have, and I know people buy stock thinking it's going up, and we've seen them people do that on A2 Milk and Z1P and
we've got A2 Milk on the show tonight, actually.
Well, we do have A2 Milk on the show, and they bought too early, only if it said just dip over again. So people do that all the time because they're trying to get into that cheap price. And I've been saying on my report the last few weeks, this is just be patient. Let the market unfold, and then just be patient.
Yes.
You know, let it prove to us it stopped falling before we start getting back into it, because there's always time to profit on the market. It's just whether you're getting caught in any downward move. That's what most people don't want, because most people don't know where to sell.
Yeah. I mean, did you want to say anything more on that?
No, I'm just thinking right at the moment it's best time to sit on your hands right now and go and play golf.
Excellent. That is all from us on the Australian market. Now it's time to get into our first email for the night.
All right, our first email tonight is from Caleb, and Caleb says, Dear Dale and Janine, would love to hear your thoughts on A2 Milk. I took a position with a medium-term view on the 22nd of February at $5.80. My stop loss is at $4.93, which gives it some room to bounce around. Now, I think the next major resistance is around $7.50. Kind regards, Caleb. So nice email there.
Okay, now he's tried to pick the bottom.
He has tried to pick the bottom.
That's quite game. I mean, when you look at it on the weekly chart, it looks like it might be bottoming out because we've had all of these opens and closes down there. You can see on the chart there at similar levels. So it could be on the start of a rise, but then really when you're looking at the big picture direction, it still hasn't proven it's going up yet.
Yeah, I looked at where he bought and I went, you've got bigger ones than I have.
Well, you've lost yours this week.
Well,
so
I lost a couple of mine this week, so just don't keep reminding me. I'm just getting back into it. So, but yeah, I mean, looking at the chart, if we expand all that up, you've had this big sideways move through here.
Yeah.
And volatile. So, you know, this is showing indecision, that's showing indecision, that's showing indecision, and he's bought in on this week. And as you see it open, he pushed up, he's triggered into it, and come back and close lower. So right now it's not vindicated his position yet, because obviously we're only a couple of days into this, and he may do well. He may have picked right near the bottom. He may do really, really well. So in terms of his stop loss, what do you think of his stop loss? He's got, was it $4.97?
$4.93 or $4.95, I think.
Yeah.
Look, as long as it's set to a level that he's comfortable with, then that's really the main thing. It's got to be the amount of risk that he's willing to take as part of that trade.
Yeah, I'm not sure how we set his stop loss, but obviously, 495 is around about there. So that's about 11.6, 12% roughly from his buy price.
So I guess he's thinking if it keeps trending lower that he's wrong and he's going to get out.
If it came below these lows, that he would actually get out.
Which is a reasonable stop loss.
And obviously 750 or roughly at that point of view is roughly a good point for resistance at the moment. So maybe a bit early.
It looks like we've got a caller on the line.
Oh, cool.
That's
maybe
exciting,
he plays
isn't
golf
it?
too.
Well, I'll ask him. Hi, Dave. We've got you on the line, which is awesome. I'm excited to chat with you. How are you this evening and where are you from?
Yeah, hi Janine, hi Dale. I'm from Sydney.
Sydney. Oh, look, you haven't been involved or experienced the floods. You're not stuck in anything.
There's plenty of rain on its way, though, that's for sure. It's really blowy out there at the moment, so bunkering down at the moment.
That's true, a terrible situation for a lot of people. Look, it's good that we can have a bit of a chat together. You asked for Whitehaven coal tonight.
I have. I've recently bought into around about the $3 mark. It's up to the $3.30 mark today. And, yeah, I just want to get your you still see the momentum continuing with the upward trend.
All right, and so are you in the stock, can I ask?
Yeah, I am. I bought in probably about 2 weeks ago.
Okay.
2-3 weeks ago, around about $3 mark I got in there.
And you're holding it for short term or medium term?
Look, I was probably 6. I was thinking, 6 months. I was hoping, I was hoping I'd, maybe make 20-30% out of it.
And you got a stop loss in place?
Yes. Probably
Excellent.
about the $2.80 mark I would tap out.
Okay, fantastic. All right, Dave, thank you so much for calling in. We're just going to have a look at Whitehaven coal for you.
What a good question, Dave.
Yeah, lovely.
Yeah, well, I mean, I'm sure others are champing at the bit to give you a call too.
Well, this actually looks awesome, doesn't it?
I love it. I think it looks great.
I think he's done well.
I think he's done beautiful in his entry point. I think it is trending up nicely. I like this stock at the moment.
Yeah, I could see this one going up to around 440, somewhere in that zone, maybe 420. I think it looks strong.
Why is that?
Why? Well, I just look at the chart and I can see things. There is some resistance, admittedly, around where it's currently trading,
You
around
can use
360.
the mouse, you know that. It's
I'm a
there
bit
for
scared
you.
to touch it.
Why?
Okay.
It's only a mouse.
So we could
not a
see
snake
it.
or
We could
something.
see it slow down when it moves up to challenge this high here, and it may pull back temporarily. But I just think long term, it looks really nice the way that it's setting up there, and that the next level of resistance looks like it's more up around this 440 mark. But yeah, it's well done given that he's got the momentum behind it. It looks lovely.
Yeah, I do think it looks really, really good what he's done. I think, as I said, I think his entry's right. I think it's on a nice uptrend. I think it's got some good legs there. He might get another 6 or 9 months out of that, I reckon.
I'd probably lift the stop up a little bit though if I was in that trade.
Right now, or
once it actually pulls back, once that has that pullback,
lift your stop loss up and everything else.
I'd probably move it up.
All right. Well, if you want to be like Dave, make sure you give us a call on 92909988.
All right. Our next email is from Jeff. Hi, Dale and Janine. I'm inexperienced investor, and in the time that I've been trading on the stock market, I've heard a lot about shorting. I have a rudimentary knowledge of what it is, but I was wondering if you would both give an explanation of how it works. More particularly, I'd be interested to know who engages in this type of activity. Is it individuals or organisations or both? Are some stocks more susceptible to shorting than others? Is it possible to keep track of how much shorting is occurring for a particular stock? Is it fair to say that it is a manipulation of the market? And if so, should it be banned or made illegal? Many thanks, Jeff. There we go. Have you got that mouthful?
I've definitely got that mouthful. I know in private school shorting has a different meaning, but I think that still should be outlawed.
I don't know what you're talking about, but I'm just going to look at the stocks.
I'm not going to explain it. Shorting. Who does it?
Okay. Individuals and organisations can short the market.
Who does the majority of it?
Big institutions do the majority of it.
Okay, so that's.
Look at what happened with. Should it be outlawed?
Should it be outlawed? That's one thing that we've argued quite a lot of, haven't we? Because it's like when you're shorting the market, you're not really adding value to the market, are you? Really?
Look, someone asked me, do you think that COVID would have happened like it did, the pullback on the market, if it wasn't for the shorting? And I said, no, it wouldn't have happened like that at all.
GFC wouldn't have happened like that either.
So that's why I think that the shorting should not be allowed based on certain criteria.
But I think it's even more than, I know when we talk about it, and I know this is a big bee in your bonnet, is the big funds lending out their stock to short the market. You know, and that's people's money that they're lending.
I guess
out in
my
theory.
issue is that a lot of people don't know, they're not aware of the fact that their super fund, the stocks that make up their fund could be loaned out to the sharks to short it down. So ask your super fund the next time you're chatting with them whether they do that. I just think that's, to me, that's a big bugbear, but I think that who's going to regulate this whole process? Really, they don't. And there's a lot of people in the industry that actually have been in big institutions before who agree that it should be banned.
Okay, so last question is, are some stocks more susceptible to it than others?
Yes, and I think it should be, you know, with small stocks, I think that they should be out of it, you know, because it's open to manipulation then. If companies want to try to take them over, I just think it's, there is some control in the market. I just think that it doesn't go far enough.
Well, in the olden days, pre-2000, I know with shorting, basically if you short sold a stock, you had to buy it back within 3 days. That was the rules. Nowadays, that's all leverage shorting and all that has completely changed all the rules, which is meaning we're getting bigger, deeper hits quite regularly when they are doing all that shorting. So, look, I don't think what they're doing right now, I don't think it should be allowed, mate. I really don't. So I'm agreeing with you.
And where does he find out about shorting? You can find out ASX website.
Yeah, they've got a lot of information on that. Now, again, if you do want to be like our first caller and give us a call, 92909988. The next caller is going to get a copy of my book. So pick up your phone right now and give us a call, 92909988. But moving on, we do have a question from a Jock who says, "Hi Dale and Janine, I'm a 19-year-old investor and love listening to your show. I've been enjoying learning and taking notes of what you guys are offering. I'm a medium to long-term investor and would love to hear your guys' opinion on the stock Calix. It has been in a very nice uptrend in the past year and has had a good pullback recently. I do not own the share yet, but I am certainly looking to enter in the near future. Thanks for all your help. Keep up the great work. Kind regards, Jock."
Okay, look, I mean, it's a lower liquidity share.
Yep.
It looks volatile, but it doesn't look terrible.
It doesn't look terrible,
in terms of liquidity for an individual to be able to trade. It looks like liquidity increased in 2021.
Yep.
So it's up to more interesting levels. Just to have a look at that, what number can you see there at the bottom?
2,833,881.
Okay, to be precise. And then when we look across here, we're seeing around the $6 mark. Yep. So, you know, that's what?
18 million?
12.
20 million?
12.
Sorry?
12 or 13. Right, so you've got a small amount of
Wasn't it
capital.
3 million? It was 2 million, was it?
3 million
3 million times
by 6. We're not going to have an argument over this,
we
are we?
will. Whose maths is better?
3 6s are 18.
Correct. That's what you said, 12. I said 18.
Well, it could be both. It just depends on what price it's trading at a particular day.
Okay.
I just set you up then, didn't I?
You did.
All right, so so just have a look at that, right? Okay, we've got some significant resistance across here, but will it be enough to actually cause the stock to continue to fall? That's what you don't know right now. It looks like it's going up.
I like it. I really do. I really like it. And I was expecting when I looked at this stock to see a pretty CRAP stock.
Yep.
But it does look good. So I think, you know, he has Jock. Is it Jock? No? Yeah, Jock. Yeah, he's done a good job in picking this one. But it's also, it's probably not necessarily a 19-year-old new investor should be trading that.
It's a risky stock.
It's a lot riskier, so I would suggest
so it's setting a stop
ones.
loss and being really sticking with it. It could rise up to 660, 680 in the short term, and then you'll know whether it's going to keep going.
Yeah, to me, it's like young people start at. You really should be starting with bigger stocks, the big stocks on the marketplace, because it's not about making a lot of money now. It's about learning how the market works and learning how to buy, learning how to sell, how to manage a portfolio. Later on, once you get the knowledge and experience, then you can start branching out to other stuff. But right now, it's about going for safety. But I believe now we have another question, and it's from Ben, who says, "Hi Dale and Janine, my question is with regards to dividend X and pay dates and the fluctuations in the market. Now I hold shares in a number of different dividend paying companies, Rio, Fortescue, Woodside, etc., that have all recently announced their dividends for the month of March. Now the question I have is to do with these dividends as well as stop losses. Now I'm sending this email about the day after the Russia-Ukraine invasion occurred, and I'm thinking that the market could potentially drop below sell triggers on my stop losses. Now with the dividend dates being the 28th of March 2022, how do you tackle the two sides, being that if I sell before the X date I miss out on the dividend but retain profits made on the trade, but if I lower the stop loss to remain into the stock to the X dividend date, I will cover such losses in dividends gained. Would love to know both your inputs. Thanks again for the great show. You gave me that one because it was so long, didn't you?
I know that what you're going to say. You don't hold a stock for the dividend. That's
Correct.
what he's going to say.
Yeah, absolutely. Because you're speculating on what might happen, and to me, if a stock triggers your stop loss, you just exit. And should you change your stop loss? No, I don't think you should be changing your stop loss, and it sort of swings and roundabouts. And I know a lot of people try to nitpick and they try and do this and do that, and they go, oh, trying to eke out the last amount of cents or dollars on a trade that they're in, that they've made money on, but they also try and buy it as cheaply as they can. And that's really sort of fraught with danger, because you just buy and sell. If it tells you to buy, it tells you to sell. So talk about the ex-dividend date. Obviously, that's the 28th of March that he's got there on a lot of the stocks, which is obviously now we're at the 1st of March. Happy whatever, first day of the month.
Don't do it.
Okay, I'm not
I'm
allowed to sing.
Don't do it.
Okay. Happy
No,
autumn.
just continue.
Okay.
What were you going to say?
So basically, he's looking at holding it for this month, 4 weeks, and the market hasn't fallen quite at all yet, has it? Really, with the.
It depends on the
Russia
stock
invasion.
you're talking about.
Yeah,
He's
but
got
again,
three stocks there that he's looking at.
Well, he's given us 3. He's got more than that because he said etc. So there's more than that. So what should he do? I think you just keep with your stop losses. That would be my advice on it.
I think
But
that's good advice.
you need to be happy with that yourself, though.
All right. Well, Dale, it's time to get into our main topic for tonight, and that is whether now is the time to buy gold stocks, or gold ETFs.
All right, well, I think a lot of our viewers will be keen on this topic, especially given the uncertainty in the world right now. And it seems like every time there's uncertainty in the market or the world, people start talking about gold as if it's some safe haven. And I know we'll answer that tonight, whether this belief still holds true today.
You are right. God, do I have to say that?
I'm right again.
There are also many challenges investors face when it comes to building their wealth, including dealing with uncertainty in the market and in dealing with our own mindset around uncertainty, as this can lead us to making mistakes.
Now, I think the important thing to remember is that rather than being a negative thing, uncertainty means opportunity. But if you only focus on it in terms of losing money, then that is what you are likely to experience.
Exactly. You need to have an open mind to all possibilities, and if you do that, you'll see what's ahead with more clarity. That said, in times of uncertainty, we do see investors become tunnel visioned and look for safe haven assets or investments that are seen as more defensive. And what is concerning, though, is that often investors do this at the wrong time.
So much so. Now, you can't blame investors for defaulting to that way of thinking, especially when the smart money is telling them this is what you need to do. Now, we're told that gold has been a hedge against inflation for decades. It's true, but more recently, some experts are saying it's not always a perfect hedge. What we do know is that we often have a simple view, and if that an investment is rising and the upside potential appears to be, or there appears to be enough risk to justify the investing, then it's a good investment at that point in time. Now, we only experience issues when we believe there is uncertainty, as most do not know how to deal with it.
But that just means that you need to have a plan, because if you have a plan, that allows you to manage your risk. You will feel more confident about the market and your stocks. And so in times of uncertainty, you'll be more inclined to stay the course and be alert to opportunity these types of markets present.
Well, that is definitely part of it, but your plan may also include having exposure to certain investments such as gold ETFs or gold stocks that may better weather the storms in the event that they occur. But I caution viewers to not ever make a decision to invest in a particular area just because you hear this is what people are supposed to do, because that's not always the case. And as we always suggest, we need to look at the charts, as they don't lie. So sorry?
Would you like to continue?
Oh, well, I can keep... Why should I keep reading? Over the past months, investors have been following chatter about rising inflation and central bank policy changes, which means higher interest rates this year and in coming years. And now our screens are awash with scenes of war. All of this is adding to the uncertainty people are feeling about the market. Now, indeed, some investors are like rabbits in the headlights, not sure which way to turn.
I can understand that as rising inflation threatens the purchasing power of your money as things become more expensive. It can also impact the growth of the stocks in your portfolio. Now, central banks if they fail to get inflation under control, as we shared with you last week, history shows that in times when inflation spikes, these are not the times when we've seen the biggest market declines. We know that central banks are planning to raise interest rates this year to head off inflation. Currently, inflation in Australia is not a significant threat to stability, but the RBA is watching this closely. So the issue is not that you should invest in gold as a defensive strategy, but should you be investing, period. You see, whenever you consider investing in anything, including gold, it is critical that you apply the same considerations as you would to any investment.
Okay, Janine. I think let's answer the question that investors are asking, and that is, should we buy gold stocks or gold ETFs? Which is the right investment? And now you've just added, should we buy into one of these today?
Before we answer that, I will add that we are going to give you our perspective on gold and share the opinions or the options that you have to gain exposure to gold should you choose to move into that area. We will also give you our thoughts as to the outlook for gold, the gold price. So let's get into the charts and answer these questions.
I'm champing at the bit to look at the charts.
Well, first of all, before we look at gold, we're not just going to jump in there.
Okay.
We need to look at the inflation chart that we talked about over recent weeks.
Okay.
So this is Australian inflation.
Okay.
So this is total. So there are a number of different inflation
not just
figures.
your daughter squiggling on a piece of paper.
No,
Okay. All right.
no. This is actually Optima have different data sets, and one of the data sets includes the economic data. So that includes the inflationary figures. So I didn't create this chart. This is actually data that's provided.
Okay. So what's it telling us?
Well, what it's telling us is we've seen this uptick towards the end, but I just wanted to show that, okay, inflation was quite high. It peaked in 1995. We also saw peaks here in 2000. And then we saw in 2008 when the market peaked, all around the same sort of levels, but then it slowly wandered off and we saw this decline. But as stock markets were rising, inflation was falling away. So we're seeing the growth in stock markets, but our market hasn't really risen that strongly in the scheme of things. It's, when you look at what the US market has done, so this is why I don't think this is going to be a massive issue for our market. And looking forward, we've seen to the present or December 21 quarter that inflation's reportedly been up around 3.5%.
Which is pretty much in the normal range.
It's in a normal range looking back historically, yeah, definitely. So nothing to be concerned about. So that's the first thing that I wanted to talk about. And then if we go and look at the gold futures, we've got here a chart of gold futures, we can see things that might upset or have the potential to upset or change the valuation of gold over time. But you can see that it didn't really matter about all of these crises through here with Iraq, Iran wars. This was a lot of conflicts that the US has been involved in. And when I actually looked up on the internet all of the wars that have gone on, I felt really sick.
I know, because it's always, there's a perpetual war going on somewhere.
Because it's everywhere. Like, it's not necessarily US led, but they might have jumped into a war, but it's the wars that they were involved in that I had a look at, and you can't really say that there's any significant correlation there between what's going on with these. So
you're just saying it's news and speculation around about, war could see the stock market crash or whatever else.
Well, I mean, you've got conflicts through here, Iran, Iraq, and we're not seeing huge escalation. It was in the lead up to that, we got a spike in gold, but there could be other things driving that. We go forward from there and we're seeing rises and falls, just as you would expect to see on any stock or market over time.
Because the critical thing here is obviously one of the things they were mentioning about, with Russia and, we do go into a war. They're talking about oil supplies and energy supplies. Now, Iran, Iraq, energy and oil, all of that, the Gulf War was all about energy and oil. So therefore, we've seen all that, and that chart was telling us what happened to the market. So to me, why would today be any different?
Yeah, I guess I agree with you. And I stopped at this point here because I thought, well, there was a period of supposed peace, but even though there was peace, there were still wars going on around the world.
No, we've only just got out of Afghanistan.
Then we've got Gulf War in Bosnia, the Iraq crisis that happened, then we had the US invasion through this period here that I've marked on the chart, to topple Saddam Hussein, and then Iraq war, and then there was Afghanistan through this whole period here as well, which we obviously know that the US has exited completely out of Afghanistan in 2021. So, and it was very hard to put that on the chart because there was so much overlapping of these wars and so many wars that I thought, well, it doesn't really add a lot of value.
Doesn't add a value to the chart. So what else are we going to show people?
So I thought, well, we just dismiss that one for now. So I've got some, I'll get rid of that. And then next we're going to bring up the inflation data across the gold chart and just have a look at what we can see there. So here we've got a gold price that's more or less going sideways, but there are some really nice strong rises and falls during that time. So there is some volatility in the gold price, but the overall trend is the thing that we look at. So the overall trend on inflation was heading down into this period in the 90s. And we're seeing the gold price more or less flat during that period, if you like. It's sideways trend to down to eventually bottom in 2001, and then followed by a rise when inflation is more under control, if you like. So, you know, we saw that over time with the gold price rising, and we're now seeing the gold price take off again, and inflation is actually moving up right now into more normal levels, but it's not out of control, and the gold price is doing what it normally does. It's cyclical, gold.
Yeah, it's like it is cyclical, gold is, and obviously, you know, there's always a cause and effect thing in the marketplace where something happens and something else happens down the track. It's like if interest rate rises, then what else happens down the track?
Well, markets factor things in 6 to 12 months in advance. So if you think about it that way, what is the gold price factoring in right now?
Yeah.
It's not gone out of control. It hasn't shot the lights out.
No.
It's gone up strongly this last month. We can see the rise on the chart there now. If we look to the right-hand side of the chart, we can see a nice strong rise in there. But
is this just people thinking gold's a safe haven, so I'll just jump in and buy now?
Yeah, but I'm not sure everybody's convinced. Otherwise, wouldn't you see a much higher price?
Well, you'd think so.
If people there was more buying in that. So where are people putting their money? They talked about, you know, people are putting money in crypto as a defensive hedge. But really? I mean, seriously, what's happening?
It's never been proven as a defensive hedge.
It's not proven, but they're saying that part of the reason why people could be going out of favour with gold as a hedge could be because they're putting the money into cryptos. But what's happening with the cryptos? They're not going up either.
Well, Bitcoin's down over 50%, so...
So what does that mean? So that doesn't add up either. So this is where you've got to be really careful and look at the charts and let the charts tell you what's happening. Now, the gold price looks interesting at the moment, this month. It actually looks quite good, but there's a risk in the short term if gold were to trade below this month's bar that it was going to head back down here. Most people will probably be sitting there saying that they don't think it would happen, but I've seen stranger things.
I've seen stranger things.
So you've always got to be prepared for that. But on the upside, it looks bullish at the moment. If it keeps going up and we see the gold price head back up above $2,000 strongly, then we could be heading to 2,300.
Because a hedge, what you want with a hedge is something when you put your money into it, it will either hold its value
while everything else is falling.
While everything else is falling, or more preferred is to have an inverse correlation to everything else. So if the market's falling, gold is rising. And so why would you move out of the stock market now into gold?
Well, that's a good point. So let's just have a look then and add over because the Dow's got the longest history that we've got available on the chart. So I thought we'll just overlay the Dow on the top of this, and I'll just so that people don't think, oh my gosh, look at Janine's chart. It's just a mess, isn't it? Let's just keep it clean.
They haven't seen your real charts.
Let's keep it clean. Okay, I don't know if we can do that. So we're looking at the chart here, and you can see going back over time what happens with the stock market and what gold was doing. Now, there have been times in history where the stock market's risen and the gold price has fallen away. So that's the inverse correlation that you're talking about. So we're seeing falls in the gold price, we're seeing rises in the market, the overall market, and then when the overall market falls, the gold price starts to rise. But then they rise together.
Yeah.
So and then they fall together. And then, you know, the Dow keeps going up and there's a big decline in the gold price. So how defensive is that? You know, people were going for growth at the time, so there's different metrics going on there. All of a sudden the money's rushing into more growth assets, and now we're seeing money coming out of growth assets supposedly to go into other areas, potentially into gold, but gold is not making huge moves.
No, it's definitely not making huge moves. But so what you're basically saying is you're dispelling the myth that gold is just somewhere you go to hedge.
Don't just believe a blanket statement is what I'm saying without having a look at a chart first and make your own opinion. Even after you've seen what we talked about on the show today, if you can get access to charts, then go and have a look yourself and actually prove it to yourself what's really happening.
Yeah, and I think you should. I mean, it's really wise because I know a lot of people wouldn't have done what you've just shown them. They wouldn't even, and may or may not have thought to do it, but not know how to do that. And I think it's really important we look at bigger picture and we look at what the causes and effects and how these markets work. Because I know, we've talked about it with BHP and iron ore and Rio and iron ore prices and shown them the correlation to those ones. So obviously, the important thing at the moment is gold.
If something's going up,
Yep.
It's positive. We said already that we don't just make decisions because people tell us that's where we should put assets. We put assets into things that are going up and that are proven that they're more likely to keep rising. So there's a potential for gold to keep rising right now. Doesn't mean all the gold stocks will be setting up perfectly, but they have been rising in line with this move in the gold price. Will it be sustained? Well, that's a question, and that's where you've got to have some really good rules, not just jump into gold stocks because you think that, gold's the defensive thing and gold stocks would therefore be. I just wanted to bring up
we need to answer the
an
question,
ETF.
so.
Yeah, we need to look at this.
Gold ETF, or gold stocks.
Yep.
So we need to answer that question.
Look, I mean, gold has always been something that's nice and sexy because people
gold.
think that, okay, well, I can have some gold bars and, maybe paint them, put them, in the garden or something. Nobody even knows there could be a rock.
My wife loves gold.
But I heard this lovely story because we often talk to some gold experts on our Talking Wealth show on Flicks, and this guy, Joshua Rothbart, was talking, a gorgeous little son, had met this man who'd bought some gold from him.
Yep. And
he'd felt the gold. And so the child was really intrigued by all of that. So the next time he saw the man, he said, "Oh, can I feel your gold?" Okay, so not the sort of thing that you want to say in public, I suppose. No. But, you're just thinking about that. You've got the risk of having that in your house, in a safe maybe, but there are actually places that you can pay to keep your gold safe.
Like the Perth Mint.
Yeah, so that there are organisations that do all of that and companies that can organise that for you. So there's that side of it. I like the idea of gold, physical gold, but then it doesn't pay rent.
Okay, it doesn't pay rent.
Doesn't pay rent. ETFs and gold stocks will pay you rent, but they're more likely to be a bit more volatile potentially than, say, the gold price. So in theory, the ETF should track the gold price. Does it always? That's something you need to actually prove to yourself first.
So that's the simplest thing, gold
So
ETF.
Someone will say, look, just put your money in a gold ETF. Well, I want to know if that ETF actually is tracking the gold price or not, first of all, and I want to do some analysis on the gold and see where it's going, because ETFs won't necessarily have enough history for you to get a really good opinion of it.
Okay.
But, gold stocks can be more volatile. I think that I'd have a mixture, and I'd look to, always have those on the watch list and consider having some gold in your portfolio from time to time.
Okay, that's it. So, well, and to me, in summing up what we've just talked about, basically, obviously, have a look at your portfolio. Gold's okay. Physical gold, preferably ETF or stocks, but you need to do your research to balance it out. But we've also given everyone a reminder that investing in the market is not just about selecting good stocks or just moving into gold simply because there might be volatility in the market, and hopefully you got that. We also shared it's about being fully prepared, and this means learning about how to implement solid rules to buy and sell and to apply proper risk and money management to weather any storms that may arise in the market. And it's not a pun. I mean, I know we have the storms in Queensland and everything else, and I've been emailing students in those areas saying, is there anything we can do, you're okay, all that sort of stuff. So we are concerned with people like that. But storms happen in the stock market all the time, and we need to learn how to weather those. Just not say, there it is. But I think that sums it up. What do you think?
I think you've done well.
Okay, well, that's it for our topic for tonight. Now, before we get into our next email, I hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now, it's time to get dialing, and the number you need to call is 0392909988. That's 03 for Melbourne, 9290 998. So get dialing now, and the first person's going to get a copy of my book for free. So just pick up your phone and dial now.
While you call us, we will get into answering the next email, so call now. Our next email is from Will. Hello, Dale and Janine and team. I have a question on GEM, G8 Education. I bought this stock recently at $1.20.5 with a medium-term view in mind after it had taken out a previous peak in October 2021. Could I please have your thoughts on this stock? Will. Thanks, Will. Okay, Will. Let's get into GEM. Now, on the screen there, you can see the left-hand side of the chart, of course, is the monthly chart, and the right is the weekly chart. So we've got that big picture view. Now, I can see a really nice unfolding of that stock. People are probably looking at that and saying that's terrible on the monthly chart, but I'm actually thinking
it's a victim of COVID. You know, it's an education company, so they have lots of education facilities around Australia, and you couldn't bring in international students for love or money. So therefore, obviously, it's been affected over that period of time. But it's looking better now.
It's looking good, and this is probably a better time, obviously, to be in it than any other time. So I actually quite like where he's picked it up. And obviously, you need to have a stop loss in place, and that can be a bit tricky when you're talking about stocks that are trading at just $1.20 in terms of setting that stop loss on the chart. But make sure you've got some good rules in place to protect that, especially seeing it's just gone sideways. You can't get a trend line up there. And so it's about deciding how you're going to manage it and what rules are you going to use. But I think it's a good choice.
That's cool. Okay, if you do want to talk to Janine and I, remember the number to dial is 92909988. Pick up your phone right now. Janine really does want to talk to you, so ring up and say g'day to Janine and ask you your questions. But we need to get on to our next email, and it's from Marvi, who says, hey Dale and Janine, hope you are both well. Absolutely love your show. I'm currently looking at buying Charter Hall Group. Looking at this from a top-down approach, it has been trending upwards given the low rate environment. However, there's been a bit of a pullback from its high back in December last year. Now, I'm possibly thinking to get in at $11 to $12 as this has found support in the past. However, I am a little concerned given the upcoming rise of interest rates. I think this might have a correction and even drop further to $5 to $6. The share price prior to the decrease in interest rate in 2018, so that was that point he's mentioning. Would this be a fair assumption? I'm looking at investing in the short to medium term, maybe 1 to 3 years. Interested to hear your thoughts in this company fundamentals and upcoming rising interest rate environment. Please, P.S. I don't own the share yet. All of best, Marvy. That was another. Oh, you gave me all the long emails.
I did that on purpose.
I know. You
just to keep you busy.
Much anyway.
All right.
Charter Hall Group.
I was really scratching my head on this one when I looked at it, and especially trying to match what he was saying in the email with where the price is currently. He's talking about wanting to buy it at $11, $12.
You say it may go down to $11 or $12.
Yeah, and that's where he wants to buy.
Oh, okay.
Okay.
Yeah.
So he's saying it also could go down to $5 or $6. Now, do you think, looking at the chart, that this stock's likely to, based on what you're seeing on the chart right now, that it's likely to go to $5 or $6?
No.
Okay. Do you think it could go to 11 or 12?
Possible, but doubt it.
Possible, but probability is low, but could happen.
It could happen.
Okay, so when he's talking about buying it at $12, do you think there's an issue with actually locking a price in your mind when you're looking at buying a stock?
Yeah.
And what does that cause people to do?
It gives them a bias. And to me, I don't give, like if I was looking at this stock on my watch list, I couldn't care less how far it falls. I don't own it, so I don't care how far it falls.
Well, he probably doesn't either care how far it falls. But he's just looking at there. But he might say, look, I'm going to buy it if it gets down to $11, $12, but what if it gets to 13 and turns around and goes back up?
Yeah, well, what if it gets to $11.99 and he misses that and it goes up?
And is he going to be buying it on the catch a falling knife?
I don't know. That's the point. And that's the thing is, I just don't set a price target. I know you don't. If we're not in the stock, we just wait. I mean,
hey, if it found support here and started to move back up again and gave some buy opportunities, it could. I mean, looking at the monthly chart, you'd want more confirmation on the stock because of the fact that you've had these two strong bars down, especially back here when we're looking in January 2022, that big sell-off is indication that even if it has a rebound, the risk is that it might stop partway up the run. You don't know.
You don't know.
It could get stuck and then could continue down to where he's suggesting. But
They could, and he could
you have
be
to keep an
absolutely
open mind,
right.
don't you?
But again, it's and I don't know how he's come up with those figures. I mean, I'd have to sit down and work it out on the chart myself. But often we find it's hard to pick up where people have put levels on the
Sometimes
stock.
too, it comes from people not being able to get into a share, or in hindsight, they could have got in at certain levels. So say he was looking at it around here and he didn't get in, or even coming out of this low here. Is it possible that he's missed out on it when it came out of that low, and then he's sort of thinking, well, I'll just wait till it comes back to that level and get it? Is it? Do you think that's possible?
Yeah, I absolutely think that's possible.
Look, I just think there's a whole lot of issues, as you said, with setting a price level, and be really careful about that sort of thinking. Our next email is from Isabella. Hi, Dale and Janine. I would like to know your thoughts on VTS. I bought this ETF at 237 and it has been rising up until December 21. It has since dropped and seems as though a sell signal has recently been triggered. I watched your show often and haven't really heard much about ETFs, hence my question, as long-term growth seems favourable in this particular holding. I've also read Dale's book and learnt that over-diversifying exposes you to market risk. What's your view, seeing as VTS has over 4,000 holdings? Your biggest fan, Isabella. 4,000 holdings.
She's going to have to fight my wife if she says she's my biggest fan.
This is pretty much like the market, isn't it?
No, you just ignore that, don't you?
This will just replicate the market.
You don't even want to get into that one.
Can you just focus, please?
Correct.
So it's more or less just replicating what the market's doing.
Correct.
So what do you say to her, Isabella?
Well, she's asked a couple of questions. We don't talk about ETFs a lot. Why?
Why? Because you don't like index ETFs.
Yeah, so that's why we don't talk about it, Isabella. So, because index ETFs are for, can I say lazy people? Or is that too rude?
But it just depends on what your aim is, doesn't it? So, like, and your situation. So, what if you only have a small amount of money and you're first starting out in the stock market? Would you tell someone an ETF's fine?
No.
Right.
Not an index ETF. Just start buying the top 10 stocks.
Well, see, I disagree with you there on that point, especially when someone's first starting out. Because it can give people a really good idea about the stock market, and may be, I mean, look, let's face it, the US market's still volatile. It can go down quite swiftly when it does go down. But it actually gives them one stock to look at rather than having to focus on a whole lot when they might not have the experience to be able to do that.
Okay, she said 4,000 shares that has exposure to get you diversification. So what did you say to that?
Well, it's not about diversification, because in the true sense of diversification, which you talk about in your book, it's diversification across different asset classes.
True.
Not just across the stock market. And we know, looking at stock charts, that the chart of Australian market and the US market, the major corrections tend to happen at the same time. So how is that diversification? That's the thing. To really understand what you're trying to do by picking that particular strategy in choosing an ETF, I think that's really the important thing.
Diversification is about the risk in one thing falling, isn't it? Is that correct?
Yep.
So that's why they say diversify across a lot of different stocks in case one falls or a couple fall. So when you buy one ETF, your counterparty risk is the ETF provider. So say Vanguard in this stake. Now Vanguard's a huge company, so it's unlikely to go broke, but that's still one investment. It's not 4,000 investments, because I mean AFI, you know, it's a listed investment company. It invests in lots of different companies, but it's still one stock. This is still one stock. So you're not diversifying by going into an index ETF. You're just buying one more position, which has the same plus or minus risk as any other stock, I suppose, in the
I guess the best way to describe it is what you talk about in your book. What happens once you get more than a certain number of stocks in your portfolio, that you're just going to replicate an index, which is what the ETF is doing. Yeah.
So what are we going to suggest Isabella does? Because she's your number one fan.
Oh, I know. Look, I think that the fact that she's listening to the show, she's doing her research, I would say keep doing that and just keep learning from what happens. Learn from the ETF. Watch the ETF. You know, study that and start learning about the charts and how stocks move. Have a look at a few stocks in the US market and compare them to how the ETF's unfolding. Look at the Dow stocks, because that's really what's going to prove to you what could be done differently in terms of whether you just pick a few stocks if you're wanting to invest in the US market or the Australian market in the top 20 or top 30 in the case of the Dow. versus what the actual index has done over time. So that's what I would suggest is it's early days for you, and I'm really excited for you that you're involved and interested in the stock market as one woman to another. It's good to see more ladies out there.
So should she, one of the questions she asked is, should she be exiting now?
Oh, right.
You didn't answer that.
That's right. Thank you for holding me to account
Don't you
on
worry,
that.
Isabella, you're the number one VIP.
And that would depend on what your rules are for getting out. And so that's really my point.
Okay. So did that actually answer a question?
Well, I'm not going to say that she should get out.
She should follow the rules in my book.
She should follow. Oh, a trend line. Is that what you're suggesting?
I'm just saying, just follow the rules in the book.
Apply a trend line to the chart and see what the index is showing, or the ETF showing.
All right. Thanks, Isabella, for the question. The next question we have, or should I say next two questions, are on the same stock, and they're from Jeremy and Adrian. Now, firstly, we're going to look at Jeremy's question. He says, good evening, Dale and Janine. I've been looking at CSL on daily charts for the past week. Currently, I own the stock, but I've bought in as a long-term investment. This is more than just a quick question regarding volumes, buy and sell. I've seen lots of buy and sell volumes at the beginning of each day and at the end of each day. Would this be the brokers trying daily trade the stock and possibly affecting the price to gain that extra dollars? Thoughts, Jeremy? Good question.
Yeah, look, he's seeing a lot of volume at the start of the day and the end of the day. I don't know whether he's talking about the pre-open and the closing of the market, or whether he's talking about in the first half hour of the market, the last half hour of the market.
Well, you always see most of the volume in the first half hour and the last half.
Yeah.
It's just
It
normal.
depends who's trading it, though, isn't it? Like usually it's the novice or the individual investors who are trying to trade it at the start of the day if they haven't traded, because it's the institutions trading in the pre-open before the market officially opens, and at the end of the day in the auction after 4 o'clock. So is it important, I would say?
Look, I reckon it's as important as watching grass grow. On a daily chart, on a stock like CSL,
No.
geez, I'd rather put my feet up and go to sleep or play golf than watch volume.
It has had a lot of spike volume, though, looking at big picture volume rather than just talking about the start of the day and the end of the day. That's really what they want to be looking at.
Big picture volume on a weekly or monthly basis is going to tell you a lot more rather than just volume on a daily basis, and also volume over a period of half an hour in a day, And unless you're day trading or intraday trading at that volume, and it's like we were talking about last week, with the question on the depth of the market, looking at it before the market hours. That's pretty much irrelevant to you as well, and looking at those is going to give you a false picture. So, no, it's not the brokers trying to make extra dollars, it's just what happens in the marketplace.
Well, they are, essentially.
Well, they are. They do want you to trade more so they make more money, but it's really just how the market works. There's a lot of trades at first placed in the morning before market opens, and then there's a lot of trades. I mean, if you ask Janine, when we're trading for our clients and we're trading, tens of millions of dollars, when Janine's placing the trades, it's 4 o'clock. It's not at 3 o'clock or 2 o'clock. It's 4 o'clock because we're allowed to trade after the market closes and put that into the match-up and things like that. So you see a lot of volumes around that 4 o'clock mark. So I wouldn't worry about it too much.
All right. Thanks, Dale. Okay, we've got another email. Looks like Adrian's question is on the same stock, so we're going to have a look at CSL on the charts. Hi Janine and Dale, thanks as always for the show and your no BS approach. I have had CSL on my watch list for a long time. Looking at a long-term investment, I have been finding it hard to get a trend line on a monthly chart, as it's bounced between roughly $250 and $300 for a bit over 2 years. I've entered the stock today, 28th of February, as it closed February near the bottom of this band. As always, interested on your technical analysis of this stock, particularly the pattern it has been forming. I'm setting a 15% stop loss to protect my capital. Thanks, Adrian. Okay, so he's picked up the stock.
Can I ask the question, part of the question first?
Go for it.
Even though it's ladies first, I'm going to jump in anyway.
Okay, fine. Okay.
If you can't get a trend line on a stock, that tells you something. And this is where the power of trend lines are, and where, when I wrote my first book and put the trend lines in it, there was all the rage around that time to people using moving averages and multiple moving averages. And I'm sure a lot of our viewers are understanding that they look at those sorts of things, because even a lot of the broker charts automatically puts like an exponential moving average on the chart for you without you even thinking about it. And it's a pretty simple little tool. But the reason why trend lines work so well, or better than moving averages and multiple moving averages with crossovers, etc., it's simply because they keep you out of those periods where there's sideways in the marketplace. Now, I've done a lot of research on the trend lines, and we have 5 rules in our course on trend lines. There's only 1 rule in the book, I believe. 1 rule in the book, yeah. There's only 1 rule in my book for them. We've got 5 that we teach traders to make them right. But the reason why they work better is they keep you out of these volatile periods where you're getting sideways consolidation, distribution, those sorts of periods, where moving averages will get you in and out and in and out and in and out. So you'll have a lot of little trades you might make money on, a lot of trades you'll lose money on, but it's really a nothing area to trade. So when you use trend lines properly, you'll have less trades, you'll make far more money. You'll get in, moving averages will get you in around the same time, but getting out is where the trend lines really kick butt. And so it's a good thing that you couldn't get a trend line in. So that's
Okay.
my short answer.
Fine.
My long answer takes 6 hours.
So he's recently purchased the stock. So he's observed the fact that it's come down and it's hit this level, which is a long-term level.
Would you buy because of that?
No.
Neither would I.
Too early, because it
Why?
could just as easily slip through it.
Correct.
Because it's broken it 3 times now.
So I think it's a dangerous trade. What do you reckon?
Well, look, as long as it keeps going up, he's fine. So it's just a matter of, he's got a stop loss, which I think he seriously needs to have a look at that. Because, okay, I don't, what, did he say a price? He didn't, did he just said he bought
He said
it?
15% stop loss, but
Yeah, but
me
he
have
didn't say a
read.
price that he bought at, did he? So, because I haven't put it on there. He said 28th of February. So if I go and have a bit of a look there, let's just have a look at where that is. So that was here, wasn't it? 28. So it's a short bar. So let's just assume he bought it near the close, just for an example. So 15% is going to take him down. Let's go back to the weekly chart.
Way below everything.
So he's probably going to be getting out where, it might bottom there. You don't know. Once it's actually gone through this level, if it does turn around and go down again, does that make sense? Now, that's the only thing that I would suggest that he go and revise and really think carefully about how much he wants to risk and whether that stop loss makes sense.
So you would set a stop loss below that big blue bar, wouldn't you?
I'm not telling.
I know, but I'm telling you that sort of stuff, but I'm not telling you to do that either. But I know we talked about support and resistance last week, didn't we? And people buying just because of support and resistance, and that's where people get stuck on some of these things that go sideways and think it's trading in a channel and I'll buy or I'll sell, and then they get caught out. So that's why Janine and I really do think you haven't traded on confirmation.
It's a really good question. I'm really rapt that he's actually written in about this, so really good that you've done that and shared that with us. And your thought process, you're trying to do the right thing by the look of it, waiting for the stock to bounce off a low, but it's just, it might have been a little bit too early to confirm that low was in, that's all. But you're obviously in it now, so it's about now managing that as best you possibly can. So I'd just suggest that he think about that.
Okay, so you're not giving him a golden stamp, you're saying to be careful.
They're your words.
Okay, so be careful. You don't get a golden stamp or a golden thing from Janine. You don't get.
I just gave him a thank you.
Well, you did, because it's a great email. I love the email, and I think it's great that he's trying and what he's doing. I just don't think he did enough at that point in time.
Okay.
And the risk of taking that trade is a bit high because he hasn't traded on confirmation. But anyway, that is our thoughts on CSL. And so thank you guys for sending your questions in on CSL. Now, if you did call into the show and you missed out on us answering your question, then watch our show next Tuesday between 7 and 8 p.m. as we would love to chat with you. Now, if you are not able to watch live, you can also email your question ahead of the show. The earlier you get it, the better. Now, you can do this by sending in your email to info@wealthwithin.com.au. And remember to include Wealth Within live in the subject line.
Also, we'd really appreciate your support for what we share each week, and you can do this simply by subscribing to our channel. So if you've not done so yet, please hit that subscribe button now and also give the show a big thumbs up. Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight, and we've so enjoyed receiving all of your emails, and thank you those who called into the show. We love the opportunity to chat with you personally.
Now, as always, thank you for joining the show, and we hope you have a great week. For now, goodbye, good luck and good trading. Give us a big thumbs up.
Bye for now.